Singapore REITs, real estate investment trusts, have been correcting from their March and April highs. And this has been worsened by news of a resurgence in COVID-19 cases. Indeed, the government is bringing back social distancing rules for gatherings in homes and for workplace capacities. And if the situation worsens, so-called circuit breakers will likely be reinstated. The REITs market naturally doesn't like this. Not surprisingly, retail and hospitality REITs have tended to be hurt more than industrial, logistics, and office REITs. Retail requires social mingling. Hospitality requires reopening of travel. Now, if you're one of those who lamented not getting in on Singapore REITs when they climbed off their lows November of last year, well, here's another opportunity. November was when the good news on the vaccines came out. But we now have bad news that there is renewed spread in the developing markets and even Singapore. In deciding what to do, ask yourself, will we suffer forever COVID, or will this be over eventually when vaccines are more widely rolled out? As much as it does feel like this will take forever, it is reasonable to believe that this will be over. Maybe not this year, but possibly next. So this may be a buying opportunity in Singapore REITs for those who missed out the last time. But so many REITs, and CGS-CIMB research has ad ratings on a pretty wide range of REITs. But I'll tell you which one I like best amongst CGS-CIMB's ad-rated REITs. Let's start with the worst hit sectors, retail, hospitality. Now, hospitality will depend on resumption of travel, which will likely come a lot later in the recovery. But effective management of the pandemic and resumption of retail is a more realistic near-term prospect. And within retail, one of the worst affected is Frasers Centrepoint Trust. It is down 7% from its March high closing price. This is a Heartland retail play, and it has all the hallmarks of Heartland resilience. Its occupancy rate has remained high at around 95%. It has a long WALE, or weighted average lease expiry, of nearly 5 years. Its properties are household names: North Point in Yishun, Tampines 1, Tiong Bahru Plaza, just to name a few. At this very time, Frasers Centrepoint is trading at Singapore dollars $2.38. Now it rose from a low of 2.05 in November to a high of 2.66 in February. Now, the so-called 61.8% Fibonacci retracement of that move from November to February is $2.36. There should be some technical support at that level, but of course, if there is a circuit breaker, it may go lower. But these are pretty attractive levels. On our forecast distribution per unit, we are looking at a yield of 5% for FY21, rising to 5.4% in FY22, and it is now trading at 1.04 times book value. And if you're the sentimental type, the sort who look back at what could have been, remember, it is now only 78% of its pre-COVID-19 high.